Right now, everybody's tacking left. Bitcoin down below 20,000. We have a slew of crypto CEOs that are resigning. We have consolidation in the market.
If we could use a stablecoin that was regulated and approved by both sides of that transaction, it would be more transparent, it would be much faster, it would definitely be more productive, but above all, I would save millions of dollars. And so would everybody else. I can't wait till we can do that, because that kind of innovation should be supported, and it is. And that's why we're all here. This isn't about, speculation on asset price. This is about reducing the fees of how the world's economies work. More transparent, more productive, completely auditable, regulated, but less expensive. So does Jamie Dimon feel threatened? You're damn right he does. That's a big part of how he makes money. Too bad.
Out of Asia, when we report on blockchain, crypto, and Web3, we see the fastest adoption of crypto in countries like the Philippines, where they have 70% of adults that remain unbanked. These are not JP Morgan clients.
Right.
These are people who are transferring their dollars back to Philippines with remittances up to 17%. This is what USDC, stablecoins, crypto can potentially unleash.
Yeah, there is a social mission here. That is a good thing, but it is not going to solve a different problem we have right now. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stablecoins and Bitcoin and all the projects and Ethereum on down and Polygon and Mistin and everything that's coming, the truth is that none of it is owned by institutions. Zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people that do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization. That's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Mm-hmm. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, and Jeremy, wherever he is, was the guy that got that done, it'd be like bringing Led Zeppelin back, and he would be the lead singer. All crypto assets would appreciate overnight by 10% because it would signal the move for policy. So we should all support the initiative of everybody, and there's other people involved in this. Shout out to Sheila Warren and Perry Ann Boring, who spent countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge with the government we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. It's not scary. If you buy Microsoft for your office and you're typing on Word, that's software. That's a productivity tool. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost. In a way, you should look at that optimistically, because what's happening here in this last 9 months is we're scraping the patina and we're removing the idiot management teams out of the market. All these bankrupt ideas will not come back because they were tested and they didn't work. And that's an important way to build a nascent industry. So it's the litigators will litigate over the assets and the lawyers will sue everybody. And that's okay, because now the remaining players are being strengthened by the fact they're still in business. They're able to raise capital to the extent they're doing that. And the idiots are gone. What's wrong with that? And I think we start now, even though we're in a crypto winter, at a much better place. And I think the fact that they even woke regulators up, when you lose $60 billion, mind you, it was decentralized, so a lot of it was outside of the US, that's maybe good.
That's a good
thing. And look, you got to feel sorry for the pioneers that got the arrows in the back, but they were idiots, so that's okay too. In the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates, because if you ask a big, let's just take a big Middle Eastern bank, I don't have to name the names, but they've got 5 million accounts with over $2 million in each one, and they want to just have access to a stablecoin, Bitcoin, and one chain, and they want to offer that to their clients. They won't do that until there's regulation.
There's no compliance infrastructure at the moment.
And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So just like I would in energy, or just like I would in tech. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. And so I think I'll do quite well. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now. All of these bankruptcies, defaults, changes in management, it's a cleansing that's going on. It's a very difficult time to fund new projects, and any valuations that people thought they were going to get 4 months ago are being cut in half, sometimes down 60%. But the good ideas, and the way to look at this, in my view, and I'm fortunate, I spent a lot of time teaching graduating cohorts of engineers, MIT, Waterloo, Temple, wherever they are, Harvard Business School guys. When you meet those cohorts, a third of the class are entrepreneurial. And so I'm doing this selfishly. I like to see their projects before the VCs do. So I'm sitting in the class and we go out for beer afterwards, whatever.